Okay, thanks for explaining that, Martin. So earlier on you talked about day trading and swing trading and trend following. Now can we do a comparison across all three styles? What have you found with looking at those three different individual styles?
Yeah, this is very interesting to look at the performance metrics of these three methodologies. And what I found that in the long run there is really not much difference. They all show, the very similar Sharpe ratios and other statistics such as drawdown and returns. So hypothetically, we can say that intraday strategies should have a higher Sharpe ratio, return to volatility ratio, because of the law of active management that was introduced at the late of 80s by Richard Kahn. And it says that Sharpe ratio is proportional to the square root of the number of trades per year. And in practice, there is not really much difference. What counts is how and when the strategy performs. Sometimes this trend following can have a very nice run. Sometimes can have this intraday strategies can work very fine, and then at different times swing trading might be the best. But when you look at it from the historical perspective, then all show the same achieved return to volatility ratios. So not much difference there. What is probably the best is to combine these three approaches together and trade it at each point of time, all three together. If you cannot really figure out which one is the best right now, I can say that right now swing trading performs very well, but it might change every moment. So you never know which one will perform best. So it's always good to apply different kind of approaches at the same time.
Okay, so you've got some examples of actual trading metrics here. Can you just talk us through those?
Yeah, so let's say we have some examples here for intraday trading strategy that was working since 2000. 2000 or maybe before 2000 till the end of 2011, and it was about 40% a year with some reasonable level of drawdown. And after that, it started to go down. Equity was going really south, and when we compare it with some swing trading for the same period when it stopped trading till today, then swing trading shows the opposite. It shows that it can make this 40% the intraday strategy was making before. So this is what I was saying, that it's always good to combine all three approaches together. You've got enough capital, because you never know when there's gonna be hard time for some type of speed of trading. So what I can say is that trend following, or systematic global macro as we call it today, is always performing in the long run. But again, there might be some periods when let's say this year it's about 6% down from trend followers. So there might not be very good years. So what we try to do is combine different approaches together and smooth out the equity curve in the long run at each point of the time. Yeah, as can be seen, equity curves, different time frame, there is tendency for intraday trade to work differently from swing or trend methodologies. So as we said, it's good to combine different approaches together, and as we can see, we did some study here and combined it's just intraday and swing, but still it shows that the equity curve here in comparison with buy and hold S&P index shows very smooth, a very nice performance. So traders who have enough capital to be involved in all these three approaches have some kind of advantage, I think, in the market. So it's so-called diversification in the time frames. And if you are trading swing and trend, then you are also diversified across markets. Yeah. But recently I also received many intraday strategies, and they are trying to diversify across parameters. So it's a different kind of approach, and it seems that it's working for these developers, because I have developer doubling his capital in a year with a reasonable level of risk. So diversification is also possible for intraday strategies across different parameter sets. And if you are trading different markets, so you can also diversify there. But historically, in the long-term perspective, I would advise to look at this intraday swing and trend following together to smooth out your equity the best.